All right, welcome traders. It is Friday, 12/15/2023, 10 days until Christmas and the end of a pretty interesting week here in the markets. We got a lot of different economic reports. We had the Fed indicating that they not only may be done, but they also may be cutting rates next year, maybe up to 3 times or so. All that is yet to be seen. Don't know if that's really going to happen. We had a wild and woolly end to the day in the markets today. But other than that, all is good, right? So let's just jump into the accounts and see where we are, and we'll take a quick look at the market, and then we'll jump on in. So if we're looking at the markets today, SPY and SPX pretty much just flat on the session. Now they were down a bit earlier. They opened up, dropped down, and then finished pretty much at the same levels of the day. So really a nothing burger of a day. So what does that mean when we're looking at SPY? And we were using this a little bit earlier in one of our sessions with our Income Navigator members, just to go through why I would put certain trades on and why not. Since we had buying power available in our account today, we decided just to go through how we look at our portfolio. And when I review my portfolio today, number one, the first thing we do is we go through every single trade that we have in the portfolio and analyze, is there anything to do with what we have on? I mean, are we near stops? Are we at take profit targets on naked puts or other things that we have, strangles, what have you? A lot of them are set to take profit at certain points. But if they don't, it's all good. But we want to review each of those trades. Do we need to take some things off, put some things on? Okay, no, that's number one. Number two, then we start to look if we've got buying power available, which we did. We were below our buying power threshold technically today. So my first thing is I start to look at my core trades. Do I need to get my core trades on? Any long-term 112s? Yes. Great, put that on. Next thing after that, strangles. Am I up to date on strangles? I was actually a little light. I had 4 out of 6. I'd like to have 6 on. We've had a couple just come off recently. And the goal there is, can we put strangles on? Yeah. What do we want to put them on? So it leads me back to this, and I'll talk about the market in just a second. And then after strangles, can we put any standard 112 trades on futures? Then we'll look to see anything else that we can do beyond that as far as spec trades go. But when I looked at strangles, can I put a strangle on right now? And I've got, the way I'm set up, I've got 2 gold strangles, 1 oil strangle, CL, oil futures, and then 1 ES strangle. So those 4 strangles are on right now. So the first thing I would look at is, should I put a strangle on in ES? Well, ES with really low vols, not the best thing, although volatility really doesn't stop me from putting trades on. Okay, I still need to put trades on. If the vol's higher, certainly can help you get more premium, but it doesn't really impact, in my opinion, the overall move of the trade or the market. The market's going to move wherever the market moves. Okay, volatility just means I'm going to get more premium for that move, and maybe I can get a little farther away, withstand a little bit of a move, maybe. Okay. For me, it doesn't really impact my trading because I'm out 90, 120 days on most of my trades. So would I put in a strangle on ES right now? Well, taking a look at SPY here, you're above the 3 ATR, okay, 2 days in a row with RSI being overbought. But on the weekly, we're still moving higher. Is it a good trade right now to put a strangle on? Yeah, any day is probably a good day to put a strangle on, because either way, it's going to be a 90% chance of winning, yes or no. Okay, I win 90% of the time on strangles. I don't care if the market's up, the market's down. It doesn't really matter. Every market that I've been in for years and decades, I still have a 90% win rate. Last year in 2022, when the market was going down, I won 90%. This year, the market's gone up, the market's gone down. I still win 90% of the strangles, because that's the probability. When I'm putting them on around 7 delta or so, you're really expecting 90% of the time to win. So I don't get too caught up with all the volatility and C-vol and oil volatility and gold volatility. Yeah, I think they're helpful. to do. I'm not saying don't look at that stuff, but it's not going to stop me from trading if I need to trade because I'm relying on probabilities more than I am on vol crush, which certainly helps. Okay. And I get it, all the tasty trade teachings and stuff, and look for high IVR and all that. It's all good. Okay. I am not disputing any of that. What I've found is I'm still at a 90% win rate overall. Just in low vol, I take in less premium. In high vol, I can take in a little bit more premium and get a little farther away, which makes me feel safer. But the market's more volatile, so the swings can be bigger and you can still get stopped out. Okay. So I think it's a give and take overall, but I'm not going to put anything on ES here because as I look here, I think we could still go higher on the weekly, even though the daily might be getting a bit overbought. But this has been overbought for a while. I just don't like where we are. I like to be in the middle of a range of the ATRs and the Bollinger Bands on the weekly more than anything to put a trade on. I don't know if that means anything or not. You still have the same probability, okay, of going up and down. So nothing to do there. So no, long story short, no strangles in the ER. We'll look at the Qs today. They were up. So tech was up today for the first time in a few days or a day or so here. Yesterday it was not participating. Today it is back up. And it's just riding the top of this 3 ATR band here. It is not super steep here, but it is still rising. But if we look at the weekly chart, you're still a little bit below, but you're really close to it. And it looks like maybe, new all-time highs are within, few points here at all. But tech doing well. RSI is overbought and moving higher. MACD moving higher. I think we're good on tech. Now, the one that's been interesting to watch has been IWM, where we saw a little bit of a rotation, really strong weekly moves up, and this was a monstrous week in IWM. We ran all the way up to this resistance level, and then we just failed at it today. So we couldn't break through and stay above it yesterday, and we failed at it today. I'm not saying we're going to fail and go all the way back down to 161, okay? But this thing's it's gone and it's done its thing, and it doesn't mean it's dead. But we do have now a gap fill below here that we have to start to watch. Now, it's not far below us. We could easily fill that gap and then continue to move higher. I don't even know where to draw uptrend lines on this crazy thing right now. I'll leave it the way it is, but you could draw steeper lines down here on it. I think this thing is just, bananas. So I think that's probably a little more reasonable, but that's a really steep line to take a look at. But it's been touched on at least 3 or 4 times now, which does validate it pretty decently. So IWM in a good mood, moving higher, but it is overbought, as is everything else on the daily and the weekly. It could still have a little bit more to go. We'll keep an eye on it. I'm not getting long anything here from a specific long style trade. I'm not selling naked puts on much of anything in the markets. I'm talking SPY, Qs, IWM, individual names, ETFs. Okay. I will trade some other things here that look better, but I just don't think the risk reward is there. Can we go higher on SPX? Can we hit 4,800? Can we hit 5,000? Very possible. I just don't see the risk reward there. I think it's a dangerous area to be trying to get long in the market. I think it's overextended. Taking a look at the number of companies above their 50-day moving average on the S&P, falling again today, dipped fractionally yesterday. We hit that magic, 90 zone, and that's where we have failed a number of times. And we're seeming to fail there a little bit more now. You got RSI and MACD heading lower. We could be heading into, I think, a little bit more of a pullback next week, but we'll see what happens. Put-call ratio stayed low, which is good for the market. So the lower the put-call ratio, okay, the more bullish the markets tend to be. It's not crazy, but it is still lower, which means as this thing drops, the markets typically will rise. Taking a look at the VIX, it did fall on the session today. VIX is just totally dead. It's at 12, very low volatility, not a whole lot of anything in the market. Did get a little bit of a pop on the US dollar today. So US dollar popped up a bit on the session after a pretty good 2 days of selling. I don't know if it's a bottom or just a little, quick bounce here today. The overall sentiment looks very, very bearish on the weekly. We are not near oversold. I think the momentum is all to the downside. I think any bounces here, especially anything that comes back up to this 21 EMA, can possibly be sold and be shorted on the dollar. I think it could go lower. Okay. Looking at the 10-year today, it didn't really do anything. It held in there. It was down 2 cents, so really not moving, but it is still below 4%. It is also oversold. MACD is still heading lower. The weekly still looks bearish. Okay, but the daily looks very, very oversold. This has been a big, big, big move lower on TNX, which means if you are long TLT, you're getting at some pretty lofty heights. You've made a good return if you got in at the right time, not back here when everybody was, saying, hey, we got to load up the boat at 100, 102. Well, you didn't even make it back there yet. Okay. And we're at highs that we haven't seen since July. Okay. So it's only been a couple months. We're just getting back to those highs. If you timed it and hit the bottom perfectly, great. Most people were calling to get in back here in the low hundreds. We still haven't recovered most of those people's money yet, but you've certainly reduced your losses on it. But this thing's had a really good run on bonds. How much longer does it go? I think it doesn't have a lot more left in it. And I'm not saying it's not going up to 105, maybe even 110. I'll be a bit surprised if we get a whole lot above that. Doesn't mean we won't. Okay. The Fed's still not cutting anytime soon. Okay. They can cut 3 times next year, knock yourselves out. It is not going to be in January or February. So we'll keep an eye on unless something happens in the economy. Take a quick look through futures. Today, looking at the Aussie dollar on the session today, it had a pretty good up day. Today, looking at the British pound, it had a pretty good, a pretty good down day on the session. So Aussie dollar rose on the session, British pound dropped, Canadian dollar, a little bit of a rise, and then the euro down on the session. With the dollar rising, you would expect most of these to be down, but the Aussie dollar and Canadian dollar held up pretty well today. And I think those are looking good, looking better in here. I really like the way the euro is looking here on any pullback. I think it's setting up really nice for a 112 trade in here, which I think we'll be keeping an eye on. All right, oil. So we're taking a look at oil here today. Another little bit of an update today, up 0.26%. But oil starting to find a little bit of a bottom here. This descending wedge, we're almost to 21 EMA in the top of this wedge. I think it's significant that we have bounced off of this trend line. I think it's significant we bounced off the Bollinger Band and the 2 ATR. I think those are things to look at. Look at the RSI coming off of oversold levels here and just slowly moving higher. And you had MACD with a slow, nice recovery. If we take a look at the weekly, okay, we've certainly stopped a lot of the plunge on the MACD and a bit on the RSI with a decent up week today and a pretty good long-tailed doji-looking candlestick here. So when you've got that long tail and a big reversal on the week where we had a big down day and then 3 up days after that, is this time for a reversal? Possibly. I love oil here. I think the risk reward on oil is absolutely fantastic. I cannot stress enough how much I love oil. Whereas the equity markets are doing the same thing in reverse. They're near a top. I think the risk reward to go higher at an S&P and the Qs is not great. I mean, I think you have a terrible risk reward. I think the risk reward on oil here is fantastic. I think 67, I love the number, 67, 68 in here as a low. I'm not saying we can't go lower. I like this previous line that we have in here, which is right around the 67 mark. I think you can sell puts below 67. I put on a new 112 trade in oil today. I've got naked puts in oil. It is, again, my largest position. I love oil. I love where it is here. Can we go lower? Maybe. But all of the the fear of the invasion of Gaza and the attacks by Hamas and all of that, this was going to spread throughout the Middle East, oil's going to go through the roof, hasn't really materialized. I think most of those fears have gone away, okay, which has now driven oil back down. I think they're still there. I don't know that this conflict is going to spread. I'm not saying they want to have a ceasefire. I hope for everyone's sake that everybody accomplishes their goals and we spare as many innocent lives as possible. However, from a trading standpoint, I think there's still risk to the upside, which means I want to play long in here with a good risk reward. I think we could still pop on any kind of an issue. I still think oil inventories are a bit low, can still be filled. I know production is cranking from the United States and several other nations. OPEC's trying to keep a lid on things here and keep a little bit of a leash on it. So I think they don't want to see this thing going below 68, 67, 66 area. And I think we could be heading back to the 80s and 90s at some point in 2024. If there's a recession early, I think it's going to slow it down. I don't think it's going to tank it. No pun intended. I love oil. I'll move off of it now, but I think the risk reward here is great. 112 trades, naked puts, fantastic on oil. Really like it. Now, if I look at oil volatility, it's been slowly moving up. It's been elevated and it's just staying there. All right, if we take a quick look at gold, gold has really had a nice couple week pullback here off of this spike. You're also seeing that gold volatility. It's just all over the place. Spiked up, it's down. It's just kind of right in the middle of its range right now. So gold volatility is okay for trading. But if we're looking at this uptrend line, I know we violated it a bit in here, but I still like this line. I still think oil or gold will have some legs heading into next year. A bit. I like metals. I like gold. I like silver. I like copper. I think those are great plays. I'm very bullish on 112s here. I also think on any further pullback on gold, I think strangles are the word of the day. I don't even think you need to pull back much. I think a strangle here skewed to the upside a bit is probably a good thing on gold. And then bonds, I think they're just overdone. There's no risk reward here in getting long, in my opinion, at this point in time. This thing is overbought. It's overdone. It can always go higher. Okay, the markets can stay irrational longer than you can stay solvent. But I don't like the risk reward. I would not be getting long bonds in here, and I'm going to wait on any kind of a pullback to put something else on in bonds. All right, so there's where we are. Lastly, we'll look at some live cattle. I think this is also a really good risk reward play. Okay, we came down, we took a pretty good hit. Okay, it stopped us out as well on a strangle, but I think this is a good spot to get in. I think a strangle here is possible because, again, you could come back down a bit. I think we could also rally a bit from here. I like the fact that we were in this falling wedge and we broke out. We tried to break to the downside, got back in. Now we're trying to break out to the upside. We're right at the PSAR reversal spot here on live cattle. I think cattle can go higher from here. I think the risk reward is good. I think you can base something underneath these lows in here, and certainly these lows around 160. So I think this 160 area, I think anything below there, I think 112 trades, good options for that. And we actually are sitting on a 112 trade. Our lows 151 on the naked puts. I like where we are. Okay. I'd be okay with assignment at 151 as well. That would be below the 618 retracement. Okay. I'm hoping not to get assigned or have to make that decision anytime soon, but I do like it here. So I think, again, risk reward, not too shabby. And then net gas, I think this is also on the same type of play right now as oil. Look at that downtrend. Okay, you've been in a pretty significant downtrend here. Okay, and if we draw, I don't know how that's going to look. Right, this is a pretty defined channel that we got running here that this thing has been in, and now we're trying to move up. We had a PSAR bullish reversal today. You've got MACD moving higher. You got RSI coming off of oversold levels. I think nat gas is also a very good potential reversal trade. Naked puts, 112s. Yes, it's the widow maker, as they call it. Yes, there's a lot of volatility in there. But I like where we are in heading into the coldest months. I think that's all. I think this inventory is full, which is what's preventing this from really moving higher. But I just don't know that we can move a ton lower. It's nat gas; it can do its own thing there. But I think we can get some trades on in nat gas. It's something I'm definitely going to be considering. All right, just a quick look at the sectors. I know we're spending a lot of time, but it's Friday. We're going to wrap up. Semiconductors just on an absolute rip higher. To me, it's just gone. You can't do anything. You are so overbought. I mean, ridiculously overbought on semis. Tech's moved higher on the day, second leading sector, not only up by 0.5%, but tech's overbought as well. Biotech overbought, moving higher. XLY way overbought, moving higher. That's your Amazon and your Tesla. Materials as well. Just in this kind of a rising wedge here. I think we keep an eye on where it is. And then at the bottom here, utilities not having a good day. Regional banks pulling back a bit, but giant gap up yesterday. Real estate down just a fraction today, about over 1%. Gold miners, a nice pullback. I'm really bullish on gold miners next year as well. Love the precious metals, as I said. I think that's something to keep an eye on. And then today, the only Magnificent Seven stock that was down was Apple, and it was down 54 cents out of almost 200 points. So down only 0.27%. Everything else up pretty nicely. Microsoft, big day today, stopping that slide. Amazon and Tesla, both. We talked about the XLY. Amazon, maybe a breakout. Tesla, maybe a breakout to the upside. Like these charts, I like them. I think this is in a squeeze and Amazon breaking out. I think you could see Amazon make a nice run to 155 or so. Again, risk reward. How would I play risk rewards? I would play them with butterfly trades. Okay, low risk, high reward trades. Trying to figure out what the timing is going to be into the end of the year. Santa Claus rally into the 31st, into the first couple of days of January. I think you could put on a butterfly in Amazon. I think you could put on potentially a butterfly in Tesla. I don't know about Google and Meta. I also think you could butterfly NVIDIA here. And I also think you could start to consider looking at Microsoft, but it's not my favorite of the three. I really like Amazon. I really like Tesla. And I really think that maybe NVIDIA could make a move. I would be willing to put some butterfly trades on, bullish, call butterflies on those and watch the squeeze and see if we move up from there. All right, so there's some trade ideas into next week. Take a quick look at the account that we're in today. Delta 49, not too bad. Pretty doggone Delta neutral, almost to the penny. Theta moved up today. We did get some trades on. I put a new long-term 112 trade on today. I also put a standard 112 trade on oil today. So added some Theta. Netlick popped up a bit more today. We're close to new all-time highs. We're sitting right there. BP usage moved up 61%. 10% of that's bill, so it's really at 51%. Perfectly where we want it to be. We added some trades and we're sitting at 50%. I'm good to go. Don't need to do anything else right now. Didn't close any trades today. Had a good week overall. Up $1,568 this week. Had one bad day with the strangle comes off, and then we had 3 really nice winning days today. So overall, really good stuff. Like where we are. If we take a quick look at the IRA as well, Delta 0.10, not too bad, perfectly delta neutral. 256 is some of the best theta we've had in a while. We're still only at 0.1. We could get some more theta into this account. Netlick, all-time highs in the IRA today. So we've hit yet another all-time high, having a really, really, really good year in the IRA. So fantastic year in the IRA. We're up 40% in the small account. And we are up over 21% in the IRA this year, and our goal is 18%. So both those doing very, very well. And even in the main account that we have here, our realized P&L is up significantly this year. So we're about 40% almost for the year. So we're ahead of projections. A couple bumps this month with some strangles on this just crazy up move. Other than that, it's all good stuff. So if you like this video, please hit the like button. If I can help more people, you can help me. Hit the like button. Go ahead and subscribe to the YouTube channel if you're not there already. We're going to post a video too over the weekend of a session that we did today on how I analyzed my account and how I put some trades on. You'll see the exact trades that I put on. Stay tuned for that video. I'll put it on over the weekend. You guys stay safe. If you want to see what we're doing in the Discord, in the description below is a code KING, gives you 50% off, 40% off, $50 off, $50 off the first month there. Get in now, see what we're doing. We've got a cool new opportunity for everybody, some small group training that we're going to be starting in January. So you're going to be in a small group of maybe 10 people at most. And we're going to take you through everything from A to Z in investing in 10 weeks, maybe 12 weeks, and in a small group. So it's going to be an awesome opportunity to learn. We're going to cover all kinds of strategies. We're going to cover the options. We're going to cover the Greeks. We're going to cover all the different strategies, not just 112s and strangles, but we're going to cover broken wing butterflies, credit spreads, all of those types of trades. We're going to get into fixed income, how to set your account up, how to build your own trade plan, how to manage your portfolio, how to hedge properly. It's going to be an unbelievably great opportunity. Be taught by both Igor and I with some guest people during the training. So you want to get involved in that. We'll make some announcements in our Discord group because it'll just be for members only. So if you're interested, pop in, see what we're doing. If not, you guys have a great weekend. Stay safe, everybody. Enjoy the weekend. And we'll see you all in trading next week. All right. Take care, everybody.